Okay, we're live. We had a power outage, so most of you will probably watch this through recording. But, anyways, okay, so let's get going through this. The first thing I want to do is go through my Premiere Level 5. But before I do that, let me make sure. I think I have a couple people watching. Can you let me know that the audio is working? Just type that in the chat. Audio's good. Okay, good. All right, well, let's try this again. So, Premier Level 5, what I like about the Premier Level 5 is that it is truly diversified. So, when I look at all four market types, when you're a premium seller, there's four market types you want to contend with. Number one, the bull, two, sideways, three, the grind down, and four, the crash market. So, this system is diversified throughout all of those crash markets. The thing is, when the market does go down, it does go down with that first leg, but then it recovers very quickly. So, this is a great system. It's my best system. It's the one that it's very similar to the one that I trade with almost all of my money, the synthetic dragon that I do in my hedge fund. So this one here, the Premier Level 5 is up about close to 1.5% so far this year. This is the one that I highly recommend if you have $30,000 or more. Okay, and also make sure that you ask any questions that you might have right now. Put them in the chat. That way I have a chance to get to them before the broadcast ends. So make sure you post your questions. Okay, let's get on to the earnings edge. How did that go last week? Let's see here. All right, so last week we did Microsoft. MSFT made almost $300 there, 292. So that one went as planned. That was a winner. And my record now is 17 wins, 5 losses, and 3 ties. Now, you probably recall that I changed the system up a little bit when we took some losses, and I made it to where every stock that I pick would have to go through all 8 filters, and also I lowered the price to only $149 a month for this. So far, since I've been doing that, my record is 3 wins and 0 losses. And you can see that we're up about $400 here year to date. So this account is up 8% year to date. And we'll see if we can continue with the 3-0 with the streak here. All right. Now, let me get into the safe wheel, right? Let's see, we go on safe wheel here. Okay, so what's going on? I'm trading BAC. I sold a put and bought a call last week. Did not get a sign, so the BAC did not go down below my put price, so I was able to keep that premium. And I have this put hedge on, this $25 put, and you can see it's down some. Overall, I don't think BAC has been profitable, but what should I do at this point really is the question. And basically this $25 put, this $25 strike, what I need to do is ask myself, is that within 70% or beyond 70% of BAC price? So BAC price right now is 33.85. So I'm going to do some quick math here. So 33.85 times 0.7, so 23.69. So if my strike right here was below 23.69, it wouldn't be close enough to the money, and I could either roll it or I can start a whole trade, start the trade over again. I could be out of the position and I could pick a different stock or what have you. Basically, it would be starting over. Whenever you move these put hedges, you're starting over. But it is within 70%, so I'm going to stay with BAC. So we're going to start the cycle over again. So we're going to do what you do with the normal wheel there. It's safe because it has this put hedge, and we're going to take the normal wheel and we're going to sell a put and we're going to buy a call. So let's take a look. And we're only going to do one contract because we have between $5,000 and $10,000. And I'm going to do it here in the one that expires Friday. So if we look at the puts, let's go to BAC. Make sure we're in the right expiration cycle. It's currently trading at around $34. So I want to get at least 1% and I want to get out of the money. So 33.50 is out of the money and I'm getting over 34 cents, approximately 34 cents. This one's close. There's almost not enough premium to trade this, but there is. So I'm going to sell this 33.50 put. And I'm just going to do one, like I said before. Mid price 35. Let's go for 36. See what we can get. Okay. That's 34. Okay, so we got filled. At $34. So we collected $34. Now we need to protect our put hedge. So we want to buy something $5 or $6. Buy a call. That way, if BAC shoots up, you know, it's gonna hurt our hedge, or at least we have a put to kind of cover that. So you can see the price is $5. You're going to buy one. The 35.50 strike call. Got that for $5, it looks like. Okay, so now we collected our premium, collected around $30, and we'll just continue to collect that now. So the goal is here to collect more premium here in depreciation than how quickly this put hedge depreciates. And as long as we can get more depreciation here than we are paying here, we come out ahead. Okay, and also, obviously, if you've been following me, you'd be up around $1,100 or maybe around 22% year to date. But if you don't want to exactly follow me, you can figure out, because there's a lot of things that has not happened yet with me personally trading this, and so I do have the flow chart, so it does give you every possible scenario. And that flow chart's available. I still have that price really low for it, and that's a link in the description if you want to get that flow chart. Okay, let me get into some Q&A. I'm the one who knows. Whew. Okay, good. Audio's good. Let's see. All right, question here. When the UAL is negative, what do we do? So I'm assuming you're talking about the 5-step. When you enter the 5-step, the UEL is not considered. It can be negative, it can be positive. You don't really care either way. Next question. What are the first and second order derivatives that you consider while making a strategy? I think you mean Greeks, not derivatives. So what do we have? We got the delta, vega, theta. Those are the first order Greeks that I really pay attention to. And then with the other ones, I pay attention to a second order gamma. Basically, let me see if I had a list in front of me, but gamma, Vama, charm. Those are kind of the three ones that I kind of focus in on, those three. If I can control those, I'm doing really well. Okay. Does the earnings edge take advantage of IV spike before earnings? And the IV crash thereafter? It takes advantage of the IV building up because we go long and the IV is building up and it doesn't really depreciate coming into next week, for example. So we take advantage of the fact that IV is going to hold that value. So it's the spike before earnings, but the IV crash and thereafter, no, we don't take advantage of that at all. Crush. We don't take advantage of that at all. We don't deal with that. We don't hold it through earnings. Charles, in a high vol environment, will the PL5 struggle? Actually, it performs better in a higher vol environment. Like, for example, 2013, when there was like no vol at all, the PL5 will struggle. And when I say struggle, it'll probably just break even or make a little bit of money, not much. I'm the one who knocks. Why don't you trade the 2060 Fly? How does it compare to the Safe Wheel? The 2060 Fly is more of a learning. You can't really, because of the fact that it uses regular margin and it uses a similar trade plan than the PL5. The PL5 is just much, much more efficient because it uses span margin or portfolio margin. And so it's difficult to have consistency in terms of making good profits without span or portfolio margin with these types of trades. I'm not saying that you can't make money with the 2060 Fly, you can, but you get into these grind down situations where we're in now and it doesn't do quite as well, so it kind of struggles with a grind down. What are the 8 filters? I'm assuming you're talking about the earnings edge. Those are proprietary. I've had that question asked to me many, many times in the group. Okay, Will. Hey, Carl, what do you think about doing some social media? Maybe get out of Twitter where you give us opinions on the economy and advertise your brand. Because I have an opinion, but it doesn't really matter on the economy because the systems that I set up and trade are more like fall on the quant side, and they're more with statistics and edge and numbers. They really don't have anything to do with fundamental analysis. So I can have an opinion, but I don't think that helps me make money. Or I think other people's opinions don't help them make money either. Like you need to find a statistical edge, I believe. And that has nothing to do with the economy and all that kind of input, because there's just so much stuff to input, so many variables that there's no way to know which variable is going to be the key variable that day or the key variable that month. And it's just, you can't really predict the future. So I don't really get into my opinions on the economy. All right. I'm the one who knocks. Why don't you apply Safe Wheel to dividend paying stock? That way you might earn from dividends too. Well, it doesn't really matter as long as it fits those 3 criteria, right? So it's liquid, it has a decent premium out of the money, and it's around that $30 range. That's all I care about. I don't really look at the dividends, and I'm glad to be able to just have those 3 variables and for those 3 variables to work, and rather than adding more variables to the pie. So the dividend thing, I might not even own the stock. I don't own VAC right now, and if it had a dividend, I wouldn't get anything for it. Plus the price of the put goes down. Everything changes based on the dividend too. And I'm glad that I don't really have to pay attention to that. I found a system and other systems that don't use that, don't pay attention to dividends. Kevin, thank you for all the videos you did. You are welcome, Kevin. Underground sausage. It's better to stay away from Twitter. It's not worth it. Twitter. Oh, also, if you guys see here that I'm building a list of stocks that are around $30 that have liquidity, good liquidity, and if you know of a stock that might fit this list, but you don't see it on this list, go ahead and let me know in the comments of this video, and I can add it to the list. But Twitter, I think, is on here. Where is it? See, Twitter, well, it's approaching $40, so it wouldn't be my first pick. But Twitter would probably be a good stock for this Safe Wheel if it was around $30. The 5-step options edge is more efficient than the 2060. It has a better hedge and it has better backtest results. So I guess you could say also that it is more efficient. The underground sausage. Glad to catch the stream before it ended. Glad to make a stream today. Okay, I just meant you can talk about current events or anything on your mind as you can link to your content. Yeah, I understand that. That's not a bad idea. I've thought about it. Just kind of just speaking my mind, kind of bring in different points of view, and from that point of view, I guess on my live stream, you don't really know me personally, but if you did, you would be like, wow, Carl is really talking a lot. Because I talk more on my live stream here than I probably do. I probably say more words right now than I do the whole rest of the week. So I'm not really that type of a vocal type person that I like to always get my opinion out there. Okay, the only issue I've had with 2060 is rolling on toss. Don't know how to do it without making an overall P&L negative. Not even sure how to do it correctly. Well, I would hope that you would be able to look at the videos. I think I did that within the videos, but you can always email me if you have a very specific thing that you want to talk about, and I can address that. Big thank you. Help the newbie like me not to fall for the fake gurus. Oh man, there's a lot of fake gurus out there. Oh, I mean engaging in Twitter, not the ticket. Okay, yeah, Twitter. There's some interesting things that I kind of believe about Twitter, that they kind of have a little bit of a algorithm control thing going on, where people are getting canceled, but they're not necessarily getting canceled by real people. If you want my opinion. So yeah, so that aspect of Twitter, there is an aspect of Twitter that kind of goes there. Imagine if you had a quick 1 minute video on the level 5 trading systems on TikTok. Those can get pretty viral. Yeah, that's true. That might work. I might have to look into that. Definitely. I do try to make everything so simple. So here I am on Monday morning. Won't look at this trade again until Friday, the end of the close, and then so I look at this thing. If I wasn't doing a live stream, it would take me 10 minutes a week. Those are the kind of things I like. Those are the kind of trading systems I like. The ones where you create a lifestyle. And then, of course, my PL5, I look at that every day, but I really don't have to. I could really probably look at it twice a week if I really wanted to. It'd be great to get a video on you walking us through a few back tests in one. I'll link, let me write that down. I'm going to link that video in the description. One video, because I've done a video like that. Okay. Option Seller ROI is a good website for finding high premium. Not sure if your other filters for the wheel. Okay, yeah, that's good. I think somebody sent me that. I think you did. And I took a look at it. It was pretty good. So you can probably find some good things there. Just make sure you got that liquidity, right? That difference between the bid-ask spread. So here, see how it's 10 cents and 11 cents, 23 and 24. This is tight. If it's like 23 and 30, that's not good. 23 and 26 is good. 23 and 27, that's kind of pushing it. I like to see it within 3 cents. So I don't think all of these stocks would qualify in liquidity. I just haven't gone through them all. But okay, I don't see any more questions. So I'm going to get ready to end the broadcast. But I always like to say, if the P&L is not real, what else are they trying to conceal? See you guys next week.